And I think you have to kind of take a step back and see what the biggest players in the world are doing. And the biggest players are the central banks who are massively de-dollarizing and buying commodities. And I think that's kind of the thrust that fits hand in glove with Zoltan Pozsar said. We are heading into a new era based on commodities and transparency, not opaque debt instruments and promises that seem to fall short. And
you're watching Silver News Daily. Like this video and subscribe to the channel for the best news that you don't want to miss. Now let's get straight to it.
Ever wondered how silver, a metal so crucial to our technology and economy, could suddenly skyrocket in value? Imagine silver hitting an unprecedented $1,400 in just a few weeks. It sounds like a financial fantasy, right? But Andy Schectmen, a leading expert in precious metals, is about to break down exactly how this could become our reality. Stay with us as we unfold the story of silver's potential surge, exploring hidden factors and market dynamics that could turn this fantasy into a startling financial headline. And remember, while this journey may start with a question, the answers we uncover together could redefine how you view one of the world's oldest treasures. Don't go anywhere, because you won't want to miss what comes next. We dive into the past, exploring the surprising truth of silver's price suppression by Wall Street banks over the last 44 years. And why this precious metal's true value has been kept in the shadows. It's a tale as old as time, with silver being manipulated, its price pushed down by the giants of finance. But why? What makes silver so unique and threatening to the status quo of financial markets? As we peel back the layers of history, we uncover a story of greed, control, and the fight for a metal that has shaped empires. This isn't just history, it's the key to understanding silver's potential future. So let's ask ourselves, if silver has been suppressed for nearly half a century, what happens when it finally breaks free? Stay tuned as we explore the incredible journey of silver, from ancient coins to modern technology, and why its future may be brighter than anyone has dared to imagine. Remember to hit that subscribe button, and let's dive into the fascinating world of silver together. Understanding silver's unique position in the market as both an industrial metal and a monetary asset provides key insights into its potential for explosive growth. This dual identity of silver is a tale of two worlds colliding, where its role in technology and industry intersects with its centuries-old status as a store of wealth. Silver's indispensability in solar panels, electronics, and medical applications showcases its irreplaceable value in our modern economy. As we advance technologically, the demand for silver only increases, driven by its unmatched conductive properties. Yet, silver's journey doesn't end in the realm of industry. Its historical significance as a monetary metal, a medium of exchange, and a unit of account adds layers to its value proposition. Unlike its industrial uses, which are subject to the ebb and flow of economic cycles, silver's monetary aspect ties it to macroeconomic trends and the shifting sands of monetary policy. This dual nature subjects silver to a complex interplay of demand pressures, not just from manufacturers and industries, but also from investors and central banks looking for a hedge against currency devaluation and inflation. But here's where the plot thickens. The global economy stands on the precipice of change, with renewable energy initiatives and electrification projects gaining unprecedented momentum. The Green Revolution, heralding a shift towards sustainable and clean energy, positions silver at the heart of this transformation. Solar panels, electric vehicles, and next-generation batteries are not just futuristic concepts, but are becoming the bedrock of our transition to a greener future. And guess what? They all require significant amounts of silver. Simultaneously, we are witnessing a resurgence in the recognition of precious metals as fundamental to financial security and stability. In times of economic uncertainty, marked by volatile stock markets, low interest rates, and fears of inflation, investors' flight to safety brings silver back into the spotlight as a haven asset. This renewed interest in silver, coupled with its industrial demand, creates a perfect storm for potential price surges. So as we navigate through this intricate dance of silver's dual identity, we begin to see the outlines of a future where silver is not just another commodity, but a critical asset in both our economic and monetary systems. The question then becomes, how will this increasing demand, set against a backdrop of limited supply and geopolitical tensions, affect silver's price? Could this be the catalyst that propels silver to the staggering heights of $1,400? As we continue our exploration, remember, the story of silver is evolving with each technological breakthrough and economic shift. Its dual identity as an industrial metal and a monetary asset places it uniquely at the crossroads of the future economy. What we're witnessing could be just the beginning of silver's ascent. Stay tuned, and don't forget to subscribe, as we delve deeper into the forces shaping the future of silver, unraveling the complex tapestry of its demand, supply, and potential to redefine wealth and technology in the 21st century, analyzing recent bullish trends in silver's market performance and the technical analysis that suggests a major breakout is on the horizon requires us to dive deep into the world of graphs, charts, and indicators that whisper the secrets of the future. But this isn't just a story of numbers and patterns. It's the unfolding saga of a metal poised for an epic journey, one that could very well reshape the landscape of investment as we know it. Let's start with the basics, the technical indicators. Over the past months, silver has been painting a picture on the charts that would make any investor take a second look. A series of higher lows and higher highs, the hallmark of a bullish trend, has been evident. The resistance level, once a formidable barrier at the $26 mark, has been breached with conviction, signaling a strength in the market that cannot be understated. This level, historically a battleground of sell-offs and bear raids, has now become a launchpad for silver's ambitions. But technical analysis is more than just lines on a chart. It's about understanding the psychology of the market, the ebb and flow of fear and greed. The moving averages, often seen as the heartbeat of the market, have aligned in a golden cross, a bullish sign where the short-term moving average crosses above the long-term average, painting a bullish future for silver. This isn't just a random pattern. It's a signal, a beacon for those navigating the tumultuous seas of the commodities market. Volume, the unsung hero of many a trading tale, has been rising, underscoring the growing interest and investment in silver. This increased activity is a testament to the market's conviction, a chorus of traders and investors singing the same bullish tune, rallying behind the potential of silver as it embarks on this journey. The RSI, or Relative Strength Index, a measure of the momentum and a gauge of overbought or oversold conditions, is telling us a story of potential. Hovering around levels that suggest strength without the overextension typical of fleeting rallies, the RSI underlines the sustainability of this bull run, hinting at the underlying power of the market's move. And let's not overlook the geopolitical and economic winds that fill the sails of silver's market. In an era where uncertainty seems to be the only certainty, silver finds itself in a unique position. The correlation between silver prices and geopolitical tensions, economic upheavals, and shifts in monetary policy is undeniable. As investors seek safe havens and tangible assets amidst the whirlwind of fiat currency devaluation and inflation fears, silver shines as a beacon of stability and potential profit. So what does all this mean for the future of silver? The charts, the indicators, the volume, and the global economic context converge on a single point on the horizon: the potential for an unprecedented rally. A rally that could see silver break through resistance levels with ease, carving out new highs in a display of strength and resilience. This isn't just speculation, it's a narrative supported by data, by patterns that have repeated throughout history, signaling that we may be on the cusp of a significant market movement. As we peer into the crystal ball of technical analysis, we must remember that the market is a living, breathing entity, influenced by a myriad of factors beyond the charts. But one thing is clear: the signs are pointing to a bullish future for silver, one that could redefine expectations and reward those who have the vision to see beyond the immediate horizon. Remember, the journey of silver is far from over. The path it will take is not set in stone, but the signs, the signals, and the historical precedents suggest a story worth watching and perhaps participating in. So stay tuned, subscribe, and let's continue to explore the fascinating world of silver together, as we await the unfolding of a market movement that could very well be one for the history books. Exploring how current geopolitical tensions and market dynamics are setting the stage for silver's monumental rise involves peering into the intricate web of global politics, economic policies, and the silent wars waged in the shadows of the financial markets. This is a narrative not just about a precious metal, but about the very fabric of the global economy and the forces that move it. In today's world, geopolitical tensions are not just headline news. They are the undercurrents that shape economic policies and market sentiments. From trade wars to sanctions, from the geopolitical chessboard of the East versus West to the burgeoning alliances forming in response to hegemonic pressures, every move has implications for commodities like silver. As nations navigate these turbulent waters, silver becomes more than just a metal. It becomes a barometer for the state of global affairs. Consider, for instance, the role of sanctions and trade agreements. These tools, wielded with increasing frequency, have a direct impact on the movement of precious metals across borders. Silver, with its dual role as an industrial metal and a store of value, finds itself at the heart of these conflicts. Sanctions against major silver-producing countries can tighten supply, pushing prices upwards, while trade agreements can open new avenues for silver to flow, affecting its availability and price. But geopolitical tensions extend beyond mere trade. They seep into the very fabric of currency wars, where nations seek to devalue their currencies to gain export advantages. In such an environment, fiat currencies become pawns in a larger game, leading investors to seek refuge in tangible assets like silver, known for their intrinsic value and resilience to inflationary pressures. As currencies fluctuate wildly in response to geopolitical maneuvers, silver stands as a beacon of stability, attracting investment and driving up its price. Furthermore, the increasing push towards green energy and technological advancement places silver in an even more critical position. The metal's indispensable role in solar panels, electronics, and other green technologies ties its fate to the geopolitical landscape, where nations vie for dominance in the new energy economy. Policies promoting green energy, driven by geopolitical aims to lead in sustainable technology, inadvertently push the demand for silver, straining supplies and setting the stage for price increases. In addition, the growing distrust in international institutions and fiat currencies, exacerbated by geopolitical instability, has led to a revaluation of hard assets. Central banks, wary of putting all their reserves in another country's currency, have turned to silver and gold, diversifying their reserves to protect against geopolitical upheavals. This shift, subtle yet significant, highlights the growing importance of silver in the international monetary system, further fueling its potential rise. And let's not overlook the role of geopolitical tensions in fueling safe haven demand. In times of uncertainty, investors flock to silver, seeking its safety away from the unpredictability of stocks, bonds, and fiat currencies. This phenomenon, a direct response to the geopolitical climate, adds another layer of demand for silver, pushing its price towards new horizons. As we weave through the complex landscape of geopolitical tensions, economic policies, and market dynamics, it becomes clear that silver's potential rise is not just a matter of market speculation. It is a reflection of the world we live in, a world where geopolitical tensions shape economies, where policies can redefine markets, and where a metal can become a haven in times of uncertainty. The stage is set for silver's monumental rise, influenced by forces that transcend borders and penetrate markets. As we continue to navigate these turbulent times, remember, the story of silver is far from a simple tale of supply and demand. It is a saga woven into the very fabric of our global economy, driven by geopolitical tensions and destined to play a pivotal role in the future of finance. Deciphering the impact of falling interest rates and other economic indicators that traditionally are bullish for silver involves a journey into the heart of global financial mechanisms and the forces that drive them. In an era marked by economic turbulence and unprecedented monetary policy experiments, understanding these dynamics is crucial for anyone looking to grasp the potential trajectory of silver prices. At the core of this exploration is the relationship between interest rates and precious metals like silver. Conventional wisdom tells us that lower interest rates reduce the opportunity cost of holding non-yielding assets, such as silver, making them more attractive to investors. As central banks around the world slash interest rates to near zero or even negative territory in a bid to stimulate economic growth, the traditional allure of bonds and savings accounts dims, casting a brighter spotlight on silver and its metallic brethren. But the tale doesn't end here. The reduction of interest rates is often a response to broader economic malaise, a sign that policymakers are striving to counteract sluggish growth, high unemployment, or other economic challenges. These conditions, while daunting, create a fertile ground for silver's ascent. Investors wary of economic stagnation or decline increasingly turn to silver as a hedge against uncertainty and inflation, driving up its demand, and with it, its price. Moreover, the specter of inflation looms large in this narrative. As central banks pump trillions of dollars into the global economy through various quantitative easing measures, the value of fiat currencies comes under pressure. The resulting inflationary environment diminishes the purchasing power of money, pushing investors towards assets that have historically served as stores of value. Silver, with its millennia-long history as a medium of exchange and value preservation, becomes a natural beneficiary of these flows, as investors seek to protect their wealth from the erosion of inflation. But let's delve deeper and consider the broader spectrum of economic indicators that signal silver's bullish. Discussing the parallels between silver and Bitcoin, and considering whether silver could see a similar meteoric rise due to market dynamics and investor interest, requires a deep dive into the essence of value, the perception of assets in the digital age, and the intersection of tradition and innovation. Silver, with its millennia-long history as a store of value and industrial utility, and Bitcoin, the vanguard of digital assets challenging traditional financial paradigms, are at the forefront of this exploration. At first glance, silver and Bitcoin could not appear more different. Silver's tangible, physical presence contrasts starkly with Bitcoin's digital, ethereal nature. Yet both share common ground as alternatives to fiat currencies, offering escape routes from the inflationary policies of central banks. They are havens for those seeking to diversify away from traditional assets like stocks and bonds, driven by concerns over currency devaluation and the search for assets not correlated with mainstream financial markets. The meteoric rise of Bitcoin, fueled by its scarcity, decentralization, and burgeoning acceptance, mirrors potential pathways for silver. Bitcoin's scarcity, capped at 21 million coins, is a key factor in its valuation, akin to silver's finite availability and the costs associated with mining and production. However, silver adds another layer to this scarcity through its industrial consumption, which continuously diminishes above-ground supplies, potentially adding upward pressure on prices similar to the supply constraints seen in Bitcoin. Moreover, the digital revolution spearheaded by Bitcoin has reshaped investor perceptions, highlighting the value of decentralization and the power of assets not controlled by any government or central authority. Silver, while a physical asset, benefits from this shifting perspective. As trust in traditional financial institutions wavers and digital assets like Bitcoin gain acceptance, the allure of precious metals as non-digital stores of value may increase, attracting investment flows seeking tangible security in an increasingly intangible financial world. Yet, silver's potential for a Bitcoin-like rise also hinges on its adaptability to modern investment landscapes. Silver ETFs and digital trading platforms have democratized access to the metal, allowing it to be traded globally 24/7, much like cryptocurrencies. This ease of access, combined with growing investor savvy and the search for alternative investments, could propel silver into the spotlight, much as Bitcoin has emerged as a dominant player in the digital age. However, for silver to mimic Bitcoin's meteoric ascent, it would need to capture the imagination of the investing public in a similar fashion, embodying not just wealth preservation, but also the potential for substantial returns. This involves a narrative shift, portraying silver not only as a hedge against economic instability, but as an asset with explosive growth potential due to technological, industrial, and monetary trends. In the narrative of financial markets, both silver and Bitcoin play crucial roles. Bitcoin's story is one of digital innovation, challenging the very foundations of money and investment. Silver's story is more ancient, rooted in the dawn of commerce and industry, yet equally compelling in today's world. As we stand at the crossroads of history and technology, the parallels and contrasts between these two assets offer a fascinating glimpse into the evolving nature of value investment and the quest for security in an uncertain world. In conclusion, as we continue this journey through the dynamics of silver and Bitcoin, let us keep an open mind about the future of investing. The rise of digital assets and the enduring value of tangible assets like silver are not mutually exclusive, but rather complementary narratives in the diverse tapestry of global finance. Stay tuned, subscribe, and join us as we explore these fascinating themes further, navigating the ever-changing landscape of investment and value in the 21st century, projecting the future of silver and other monetary metals in an era of digital currencies and blockchain technologies takes us into a fascinating intersection of the old and the new, the tangible and the digital. As we stand at the precipice of a financial evolution, where digital currencies are becoming more mainstream, the role and relevance of traditional assets like silver in this digital age come under scrutiny. However, rather than seeing digital currencies as a threat to silver, we might consider how they complement each other, offering diverse options for investors navigating the future of finance. Silver's future in this rapidly evolving landscape hinges on its timeless value, both as a monetary metal and an industrial commodity. The intrinsic value of silver, derived from its physical properties and scarcity, provides a stark contrast to the digital nature of cryptocurrencies. While digital currencies offer innovation, speed, and a challenge to traditional financial systems, they lack the tangible security that metals like silver have provided for centuries. This fundamental difference could become silver's strength, as it remains a safe haven in times of digital uncertainty. Moreover, the industrial demand for silver, particularly in sectors driving towards a greener future, such as solar energy, electronics, and electric vehicles, provides a strong underpinning for its value. This demand is likely to grow, not diminish, in the digital age, as new technologies require silver for their production. Thus, while digital currencies may revolutionize the way we think about money, silver continues to play a crucial role in the physical world, supporting the technologies that make the digital age possible. The emergence of blockchain technology introduces another dimension to the future of silver. Blockchain's potential for certifying the authenticity and chain of custody of physical assets offers a way to bridge the gap between the tangible and the digital. For silver, this could mean enhanced security and transparency in its trade and ownership, making it an even more attractive asset in the digital age. This synergy between blockchain and physical assets like silver represents a fusion of the old and the new, harnessing the strengths of both to create a more secure and efficient marketplace. However, for silver to maintain its relevance alongside digital currencies, innovation in how it is traded and invested in is necessary. The development of silver-backed digital tokens and other financial products that combine the security of physical silver with the efficiency of digital transactions could be the key. Such innovations would allow silver to not only coexist with digital currencies, but also complement them, offering investors a balanced approach to managing risk and opportunity in a digitally dominated financial landscape. In the future, we might see a financial ecosystem where digital currencies and physical assets like silver coexist, each serving distinct roles. Digital currencies could revolutionize day-to-day transactions and challenge traditional banking systems, while silver remains a bastion of stability and a hedge against the digital world's volatility and uncertainties. This duality, rather than being a point of contention, could provide a more holistic approach to personal and national wealth, combining the best of both worlds to navigate the uncertainties of the future. As we explore the unfolding narrative of silver in the digital age, let's remain open to the possibilities that lie at the intersection of tradition and innovation. The future of silver, shaped by its enduring value and the transformative potential of digital technologies, holds promise for a new chapter in the story of monetary metals. Stay tuned, subscribe, and join us as we continue to delve into the fascinating dynamics shaping the future of silver and the global financial landscape, revealing how central banks and big financial institutions are positioning themselves in the silver market, hinting at a seismic shift in valuation, takes us into the shadowy world of monetary policy, financial strategy, and geopolitical maneuvering. As we peel back the layers, we uncover a tale of anticipation, strategy, and immense potential that could significantly impact silver's future. Central banks, the guardians of national monetary policy, have traditionally focused their reserve strategies around gold, viewing it as the ultimate safe haven and a hedge against fiat currency devaluation. However, a quiet but noticeable shift is occurring, with silver beginning to play a more prominent role in their diversification strategies. This change is not arbitrary, but a calculated response to the evolving global financial landscape, where silver's dual role as an industrial metal and a monetary asset makes it uniquely positioned to benefit from both economic growth and financial uncertainty. The actions of central banks and major financial institutions serve as a barometer for the broader market sentiment towards silver. When these behemoths of the financial world begin to increase their holdings in silver, either directly or through silver-backed financial instruments, they signal a bullish outlook on the metal's prospects. This behavior is often predicated on a mix of factors, including expectations of increased industrial demand, inflationary pressures, and a desire for portfolio diversification away from traditional fiat assets. Moreover, the strategic positioning of big financial institutions in the silver market can also be viewed through the lens of geopolitical considerations. In an era marked by tensions and uncertainties, where the dominance of the US dollar as the world's reserve currency is increasingly questioned, silver, alongside gold, offers a form of monetary sovereignty. By bolstering their reserves with physical silver, nations can enhance their financial resilience, reducing their vulnerability to currency wars and the whims of international monetary policy. The investment strategies of these institutions also reflect a broader recognition of silver's potential. The development of new financial products centered around silver, including ETFs, silver savings accounts, and digital silver offerings, indicates a growing appreciation for the metal's versatility and appeal to a range of investors. These products not only make silver more accessible to the retail investor, but also add liquidity and depth to the market, further enhancing its attractiveness as an investment asset. The increased activity of central banks and big financial institutions in the silver market is a narrative rich with implications. It suggests a growing consensus among the most influential players in the global financial system that silver is not merely a commodity, but a strategic asset with a critical role to play in the future of finance. This revaluation of silver's role could be the precursor to a significant re-rating of its value, as its monetary and industrial attributes are fully recognized and priced into the market. As we continue to explore this unfolding story, it's crucial to remain aware of the broader economic and geopolitical currents shaping the actions of these financial giants. Their moves in the silver market are not isolated gambits, but part of a larger chess game, where silver's role is being redefined against a backdrop of shifting power dynamics and emerging financial paradigms. Stay with us, subscribe, and delve deeper into the strategic underpinnings of the silver market. Together, we'll navigate the complex interplay of economic forces, monetary policy, and investment strategy that is setting the stage for what could be silver's most transformative era yet. Concluding with a powerful analysis by Andy Schectmen, detailing the precise conditions and catalysts that could propel silver to the astonishing price of $1,400, challenges our understanding of the precious metals market and its potential for seismic shifts. Schectmen's insights, drawing from deep market analysis and a keen understanding of geopolitical and economic trends, point to a confluence of factors that make such a prediction not only possible but plausible. Firstly, the industrial demand for silver, driven by its irreplaceable role in emerging technologies such as solar panels, electric vehicles, and 5G infrastructure, sets the stage for a supply crunch. As the world accelerates towards a greener and more technologically advanced future, the demand for silver is expected to outstrip supply, exerting upward pressure on prices. Schectmen highlights that this isn't mere speculation, but a reality grounded in the metal's fundamental role in the green and digital revolutions. Secondly, the monetary aspect of silver comes into play. In an environment where central banks globally are expanding their balance sheets and engaging in unprecedented levels of quantitative easing, fiat currencies face the risk of devaluation. Silver, like gold, serves as a hedge against this monetary debasement. However, silver's affordability compared to gold offers a unique entry point for a broader spectrum of investors seeking refuge from inflationary pressures, thereby increasing its investment demand. Furthermore, Schectmen points to the growing interest in silver from institutional investors and sovereign wealth funds. This interest is not just in physical silver, but also in silver mining stocks and ETFs, indicating a broader recognition of silver's investment potential. As these large players enter the market, their buying activity alone could significantly impact silver's price, given the relatively small size of the silver market compared to other financial assets. The geopolitical landscape also plays a crucial role in Schectmen's analysis. With rising tensions between major powers and increasing concerns about the stability of the global financial system, nations and individuals alike are looking for assets that can offer stability and security. Silver's dual appeal as both an industrial metal and a monetary asset positions it uniquely as a safe haven in times of geopolitical uncertainty. Finally, the psychological aspect of the market cannot be overlooked. Schectmen argues that as silver begins its ascent, the fear of missing out, FOMO, could kick in, driving prices even higher as retail investors rush to get a piece of the action. This speculative frenzy, while potentially volatile, could be the final push needed to reach the $1,400 mark. In conclusion, Andy Schectmen's projection of silver reaching $1,400 is not a fanciful dream, but a carefully constructed thesis based on a multidimensional analysis of market dynamics, technological trends, monetary policy, and human psychology. While the path to $1,400 silver will undoubtedly be fraught with volatility and unexpected turns, the underlying logic of Schectmen's argument suggests a future where silver reclaims its status not just as a precious metal, but as a critical asset in the global economy. As we wrap up this exploration, it's important to remember the transformative potential of silver and the myriad factors that could propel it to new heights. While the journey ahead may be unpredictable, the case for silver's rise is compelling, offering a unique blend of industrial necessity, monetary security, and investment opportunity. Before we part ways, remember to subscribe for more insights into the fascinating world of precious metals. And although the prospect of $1,400 silver invites us into uncharted territory, it also reminds us of the enduring value and potential of this ancient metal in our modern world. Disclaimer: this analysis is for informational purposes only and should not be taken as financial advice. Always consult with a financial advisor before making investment decisions.